guys, you see what I mean by liquidity void. Liquidity void, we have two types. We have the BC liquidity and we have the CB liquidity. We have the BC liquidity void and we have the CB liquidity void. Now, the BC liquidity void is an inefficiency on the sell side, whereby price is trading in one direction on the buy side without offering a sell side of the market. Price is moving in one direction on the buy side without offering a sell side, without offering a sell side of the market. Price is just trading on one direction, buying, thus causing an inefficiency in price action on the sell side. So a BC is side imbalance, a sell side inefficiency. When price is trading in one direction on the buy side without offering price on the sell side, thus causing an inefficiency on the buy side. All of you know what range structure is, so I don't know it's part of inducement of liquidity. They mitigate their immediate candle that caused the break of structure without going to the sponsor candle. This is inducement of liquidity. Now they are inducing both buyers and sellers. BC is when price is buying in one direction of the market without offering a sell side, causing an inefficiency on the sell side. A CB is a sell side imbalance, buy side inefficiency. It's a situation whereby price is moving in one direction on the sell side without offering no buy side on that price action. Is an imbalance caused as a result of price trading on the sell side without offering a buy side. A CB is an imbalance caused as a result of price trading on the sell side without offering a buy side. So this you are seeing here is a CB, a BC void. There is no sell side on this action. Only you go use to Zoom, take join Zoom. Peters. Now, BC void, unlike the fair value gap, is filled with body candle. Fair value gap is filled with weak retracement, weak reaction. A BC void is filled with body candle. It has to be completely filled with body candle. It has to be completely filled with body candle. Now, your BC void can sometimes serve as it's always, not sometimes, it serve as your position trading, where you know that price is definitely going to balance in the future. You can set if you're trading a position trade, if you're a position trader, a swing trader, you can decide to swing it to that direction to completely fill up the imbalance caused by the CB or the BC. So it's used as take profit target for swing traders, because you know price will definitely come and balance that zone. Even if you take 50 years, if price make a move of going towards that direction, you can use that first CB or BC void that looks like it's on the discount of that premium zone or the discount of that discount zone. Is on the equilibrium of the premium zone or the equilibrium of the discount zone. You can use the CB resting in that region as your swing trading take profits, because you know that it's going to be completely filled with body candle. You see them on all time frame, and it is caused as a result of massive candles on the 4-hour and the daily. It's an accumulated 4-hour candle and 4-hour candle that accumulates into the daily. So now this is the daily. When you look at this area, you can see that there's no sell side, there's no sell price action here. There's no sell price action here. So that's the BC the void. The reverse the case is a CB void. The reverse the case is the CB void. I can't believe the USD card is buying and this DXY is just acting crazy. Wow. Can you see what's happening? So your 10 to Israel. USD card is buying massively. DXY is selling. Everybody to your 10 to Israel. So this is a basic void found on the what? Buy side. Now let me show you a CB void because I know GBP USD, Euro USD, they've been on a what? Bearish rally. Been on a bearish drop rather. Bearish drop, base drop, base drop, drop, base drop, base drop. Now you look at this. Are you for real? Yes, this card has been, yes, GBP USD has been buying for the past 6 days. Since last week. Because this is a 3-day candle. Now, who remember what I talked about? What is this price action doing here? I know you guys have already spied, so I already wrote it down. So there's no need. You can all see the OFED, right?
Yes, ma'am.
Can you see how price bounced up that fair value gap?
Yes, ma'am.
Yes, ma'am. Yes, ma'am.
That's an OFED. That's an OFED. How price feel, it bounces off this fair value gap. So if it's coming in, I want to reprice that zone and fill it completely or do a consequent encroachment. All of these are different types of price action imbalances and fill. Now, can you see this CB void? On this 3-day, it needs to be filled. The body cannot. This zone, there's a missing data right here. It's not properly priced by price. It's not complete. Coming. So it needs to be what? Properly filled. That's why you see I have my entry right here. But we have equal high, and they might want to start to sweep this equal high and come for this zone. Yes, take them out. Okay, keep my change. I want to do something for me. Give him and come back. Okay. So guys, this is a CB. Where did I remove this one from? That's right, like. This is a what? A CB is an inefficiency on the buy side. You know, I said BC is an inefficiency on the sell side. So CB is an inefficiency on the buy side that needs to be completely filled with what? Body candle. Now let me hide all objects and show you this thing on the weekly. So you can see the long imbalances. We have this also is a CB. You see how price left this fair value gap? It did an OFED. Can you see how it bounces off that fair value gap? And
Yes,
later came back and took out that high without completely filling it, and it still fell. Now, what did he do when he took out that high? He did a consequence encroachment. Can you see that? And
Yes,
bounced up. He just took out that high that did an OFED and did a consequent encroachment, and what? bounced off. Now, this you're seeing here is a what? 3-day CB. So that is a 3-day CB. And that's this candle you're seeing here will be filled with body candle. So there's no price action from, there's no buy price action from here to here. There's no buy price action. They just sell. They did not offer any buy price action. Price did not offer any buy. So when there's no buy price action, there's every possibility price will come back to that zone and reprice it. And now price might not completely fill the CB. Price can either fill the CB completely or the 50% of the CB. Price can either fill the BC completely or the 50% of the BC. Exactly. I'm done with liquidity void. So guys, I'm done with liquidity void. I've done fair value gap. I explained it very extensively well. I've done liquidity void. I've explained it extensively well, both the BC and the CB. I've explained extensively well. I've also showed you how price does. You can either fill the whole void or 50% of the void. Now, the next one is what? Volume imbalance. What is volume imbalance? Where you see a gap in price. A volume imbalance, just like the liquidity void, it needs to be filled with body candle. A volume imbalance, just like liquidity void, needs to be filled with body candle. Is it just like a crack? As if there's a crack, a opening. That's a volume imbalance. It's a magnet to price action. That's an imbalance that price caused as a result of maybe price opening, through day open, new week opening price. Then there's only sometimes price leave a gap. So that gap price will go back and fill it with body candle. And it's like a magnet to price. There is no way price can go without completely filling that gap. Am I not saying gap in that? This is it. If it's in Euro USD now or the DXY like leaving gap. Sometimes it can be caused as a result of broker manipulations. Some broker don't show it. Some broker shows it. So like Wanda, you won't see this gap. Can you see this gap? This is what?
Yes, ma'am.
This is volume imbalance. This is volume imbalance. It needs to be filled with body candle. But volume imbalance sometimes can act as what? An order block whereby price can reject from that zone, just like the fair value gap. Price can bounce off a volume imbalance, then come back later and fill it up. You see how it was completely filled by body candle. They traded above it, run this daily high, and they sold off. Okay, they run the daily high, went up, created a new high, mitigate the high before they completely start selling. GBP USD barely have gap. If it was Euro USD, Nasdaq, SP and S500, you always see them having gaps. So this is volume imbalance. It's filled the body candle. It's filled the body candle. This is another volume imbalance as well. It's an inefficiency in price action that needs to be completely what? Filled. Remember, price does not like to live in balance. So that's just it about volume imbalance and what? Liquidity void and fair value gap. Now there's something I need to point out to you guys. When you see a two-body candle like this, very clean, it's equal low. It's an untapped demand zone. because this demand candle did not properly trade into this supply. So supply was not properly cleaned out. Most times price will just come into that range, trade into that zone instantly, and continue in its direction. So that's for that. Now we're going to go into range structure, which is like inducement of liquidity. Range structure is like inducement of liquidity. When you see price creating liquidity on both the buyer and the sell side. When you see price creating liquidity on both the buyer and the sell side. Now, in that range, it's trading in a range. What is price doing? It has a premium of that range and discount of the range, support and resistance. So they know retail traders are busy buying and selling in that range. They know they will offer you that range to buy and sell. See, as people are buying and selling in that range, creating market maker buy model, sell model, buy model, sell model, buy model, sell model, buy model. Look at it. How you want to tackle this range, you need to look for what? They sweep buy side liquidity. Next place, they come for sell side. Next place, they go for buy side. Next place, they come for mitigate. Next place, they come to this zone. You see how they're eradicating, they took out this buy side. Next time, they took out the sell side. They took out this buy side. They come again, they mitigate, right, on the range. They're just moving in that range. Now, most times they bounce off that range structure 3 times, 4 times, 5 times, and they break out of it. See the W, 1, 2, 2, 3, 3, 4, 4, 5. It's even like 4 because this whole W, you can look at this, see the W shape, the market maker sell model, market maker buy model, market maker sell model, market maker sell model, market maker buy model, market maker sell model, market maker buy model, market maker sell model, and they broke out of the range. Did you see where they broke out of the range? Now they have taken the liquidity resting on top of that range. Where is their next stop? They are coming. They are coming to this zone. This is where I want to see them come. I have this place marked out since Jesus comes, but they are not coming. They are refusing to come to that zone. It's very prominent on the daily. I have that place marked out since like Jesus comes. Look at it. This is where I had marked out because I know they will my rate this low as inducement. Well, I cannot have that my dream come true because Oga DSY is not looking like somebody that is interested in selling at all. You see the way they broke out of the range with momentum. Now I want to see them either bounce on top of this range. So if I'm selling USD card, in as much as on the monthly is risky, I think I showed you guys in class, is risky because we have this monthly high right here. And that's what they are going for. That's what they are going for. That's their target. I'm not doing high today. That's why I'm not teaching that. Maybe I'll use that tomorrow as a case study because tomorrow we're doing external range liquidity. Now we're just dealing on liquidity inside the range. Now in this range, this is our 12-hour. Let me use the 9-hour. You see the way they took out this low. Market maker sell model was complete. Where would they go now? Internal range liquidity. Either they bounce off this fair value gap, making an EO Fed, or consequent encroachment. Now, but before they will move on lower time frame, what is wrong with you? Before they will move on lower time frame, they will create inducement of liquidity around this zone. Before they will move on lower time frame, they will create liquidity inside this zone, around this entry. Now we can see the 50%. So your entry is either on the 50% or completely filled up the fair value gap or a bounce of the fair value gap. Now I can also see this is an imbalance. So thus this is a what? Hidden base. Some people call it the king OB. Why is it a hidden base? A wick trading into a body candle. If you go to a lower time frame, there's an order block right there. So it's an hidden hobby. It's a hidden OB. You can see the other block. Can you see this? You can see this other block. That was the other block that was responsible for this down move. This down move. You see how the red buy stops? Now the red buy stops. That's the USD card I was teaching you guys. I like USD card because she has a clean price action. Very clean price action. But just be careful with her. She can consolidate for 5 days and move 1,000 pips in 1 day. They took out buy side. They came for sell side. Now we have a hidden OB. On the 9 hours, we have an order block, 2 order block in that range. But on the 9 hours, I can see a hidden OB. So if I'm expecting price to come into the hidden OB, I'll just look for the 50% to properly price into that zone. Now, remember that we are doing liquidity. You have a zone right here. If you don't have liquidity in that zone, then they'll use you as liquidity. They'll raise you up. That's why this fair value gap is here, is liquidity. Inducement of liquidity is different from liquidity. Inducement is found around your, liquidity is found around your POI. Inducement is when they induce your POI. Around your POI, they induce a particular zone that was initially given to buyers or seller as an entry. So they come back and induce that zone for the main move. They come back and induce that zone for the main move. When they offer a particular range to buyers and sellers, then they later come back and induce that zone for the main move. That's inducement of liquidity. They give you an opportunity to enter on the breaker block, then they later come back and remove you out, using that your zone forward to carry out the actual move. That's inducement of liquidity. So when you are thinking price wants to move, you jump in quickly out of fear of missing out. They will make the actual move and use you for the actual move. While liquidity is found around your area of interest, liquidity can just be a high above your area of interest, can be liquidity. A high above your area of interest, they might just rate that high and offer you a position to what? Sell, buy. Or a fair value gap in your order block. A fair value gap in your order block is also what? Liquidity. A fair value gap in your order block is also what? Liquidity. So your area of interest should have liquidity before you can consider it what? Well, now why this zone is scaring me, price failed to close below, it just take out liquidity. So price might want to rate this high because it's not strong enough to break structure. So guys, that's all for today. I've taught you liquidity in different formats. So that's all for today's class. So any reaction in this zone, I will consider valid for me. If you have a question, ask, we're done. No question, guys.
Um,
Yeah, I've said
hello,
some
ma,
good
please.
questions.
Hello, ma,
Ma,
please, can I ask a
please,
question?
this is Bali FS. Ma, please,
Once the Zoom is finished, I'm not opening any new
after
Zoom.
going
Like,
through
waste your time.
this, um,
Like, waste your time. Once the Zoom is expired,
on
that's
the
all.
group,
I can hear you. If you like, waste your time. Once the Zoom is expired, that's all. Whatever you want to say it quickly.
Hello, ma, please, let me ask a question. This is Fabian. This is Fabi Peters. Please, you made mention of fair value gap, that's FVG, inside our order block. Please, like, can you help us by giving us an example to illustrate on that? Thank you.
What do you mean by example illustration? You don't have eye to see fair value gap? I should show you the one I was showing you before. Where is it found? It's found in breakers. What illustration are you talking about? Eh?
Like there was something you said about that, like FVG, as the fair value gap inside our order block. So as now,
Yes,
I
fair
was a
value
bit
gap
confused
found before.
about
Is it found outside other blogs? I showed you guys fair value gap in this Zoom. Did I show you guys inside a breaker? I've shown you multiple fair value gaps.
No.
Is it not other blogs I showed you guys the fair value gaps?
Yes.
Yeah, it's
So what are you saying? That the ones I'm showing you, you were sleepy, you were not looking at the chart. I should come and show you another one again. Because I've done fair value gap extensively. I showed you multiple.
So,
are you expecting me to show you something that you assume that is a fair value gap inside another blog?
No, ma'am.
Okay, so what are you saying? Because I've taught that, I showed you. So what are you expecting me to show you again? Please, that's not a question. That's an unreasonable question. Don't ask me a question that sounds unreasonable. What I've shown you, I've shown you. You said I should show you fair value gap in another blog. The one I showed you is in a breaker. The question you want to ask that you are not asking well is which fair value gap in other blogs that are valid? That's what you want to ask, right?
Yes, ma. Yes, ma.
I'm not teaching that other blog today. I don't teach. Other blog is no value. You're just a new student. Go and watch market structure video so that you will know that other blog is not a criteria to take trade.
Okay, ma. Thank you.
They can invalidate any. Have I taught you guys other blogs?
No, ma.
How can you answer? You have not been in class. This is your first class now. Those in class, have I taught you other blogs?
No, ma, not yet.
I said that's your last week class.
Yes.
Okay.
That's what you want to ask. Which other blog is valid? Which zone? That's your question. That's what you wanted to know.
Thank you very
right,
much.
Fabian?
Yes, ma'am. Yes, ma'am. Yes. Thank you for your explanation.
You're welcome.
Yeah, hello, I want to ask. So you were talking about, so for liquidity void, you said CB.
If your Zoom finished, now be that so. I'm not going to open any new Zoom.
So you said liquidity. You said one of liquidity voids is CB. Can you spell it? Is this capital as C then B or CIBI?
CIBI, CB, CB. You see me? I write them on my chart now.
Okay.
CB void, SIBI, CB is a girl. BC Yoruba name, BISI. Buy-side imbalance, sell-side inefficiency. When I was pronouncing it, did you see me say sell-side imbalance, crayfish inefficiency? Was it not B I pronounced? You when I'm teaching all of you be playing on your background, I think I don't know, you'll be distracting yourself. Because if you really listen, you know I said sell-side imbalance, buy-side inefficiency. So there's nothing more than what a CB. Mr. Obina, did you get it now?
Yeah, I got it.
All those of you that have questions that you are afraid to ask, hey, you know, market maker is not afraid to take your money on stop loss. They're waiting for all of us because it's not only your stop loss they will take. They used to take my own sometimes. So if you have a question, ask. So I taught you guys range structure last week very well when I was teaching market structure. Range structure is also inducement. I think I explained it today again.
Yes,
when I did USD card on the daily. It's also inducement of liquidity. Then when you now have price, look at this USD card now. When you now have price creating all of this, let me go to the 15 minute. That's why you see this way. I've not shown you hanging fruit. I've shown you inducement. Let me show you hanging fruit. Now we now see price creating all this move and making this retracement to the upside to fill up this imbalance. Are you seeing all these things price is doing to this zone? This now becomes a hanging fruit. All these lows that are hanging right here. What is hanging fruit? A fruit that you can just pluck now is low resistance. Some call it low resistance liquidity. I've been seeing some people's chat before. I prefer to call it hanging fruit. Low resistance, it means price can run through them. There's no stress. So they are hanging fruit. When you stand on that mango tree, when the fruit is hanging, you can just pluck it, right? It's just hanging. Just pluck them. You don't need to stress. No resistance to hold you. All of these lows are hanging fruit. That's why you see me. I used to put it hanging fruit. And if you look at my chart, I still fix it hanging fruit. Look at it. Can you see that?
Yes, ma'am.
Did you not completely eliminate it?
It did.
Market maker sell model was completed. And how many pips did they eliminate it? Standard ICT, they can do 20 or 30 pips or 15, from 15 to 20 pips. Look at it. Oh.
Ruler.
Look at it. 36 pip completely, and they bought. Normally I target 20. You see how this fruit was hanging? There's no other block that will stop. Are you seeing any serious other block around here? No. No serious other block. What I was even expecting you people to ask me, ma, that secondary point of interest, when price use it as an entry, are we supposed to swing with it for a long time? Or when are we supposed to wait until anticipate the coming back to sponsor candle? You guys will not ask all those valid questions. You will not be asking another thing. Now, when you use your secondary point of interest to your breaker as your entry, ensure to TP at the low or the high. TP. Don't use them for swing trading. Sponsor candles. You barely see me. Have you seen me use breaker as my entry in my charts before? I'm teaching you so that you can have a model. You can have all this model to trade. Have you seen me use breakers before?
You don't use it often.
I barely use breakers. I use sponsor candle because they hold price longer. But I have students that are only breakers traders. I taught them. So I am teaching you because breaker quickly gives you intraday entry. Breakers quickly gives you intraday trade. So when it gives you a trade, just TP your 50 and your 60 pip and say goodbye. It will come back and hunt that zone.
As inducement.
Don't say ICT Queen, I entered, you came back. Of course, it will hunt your zone. That's a secondary point of interest. That's not a sponsor candle. Even if it gives you 300 pip, it will still come back and hunt you. Those are the kind of questions I want people to ask me, intelligent questions. All right, that's all for today. Goodbye, everybody. I hope you guys had fun.
Yeah, we did.
Obina, write the assignment on the group. Everybody, show me a BC, CB. Go to the chat, you see an assignment. Obina, go and look for Creed. Creed assignment, I pinned it. Obina and Bali, I pinned it on the group. Look for Creed. Is BC, is CB, is 1 hour, is fair value gap. BC, CB, fair value gap. So everybody, assignment, BC, monthly, BC, weekly, BC, daily, BC, 4 hour, CB, monthly, CB, weekly, CB, daily, CB, 4 hour for CBs and BC. Fair value gap, monthly, fair value gap, daily, fair value gap, weekly, fair value gap, 4 hour. And inducement of liquidity, show it to me. I taught you. Show me inducement. Show me hanging fruits. All those are internal range liquidity. Show me low hanging fruits. Show me low hanging fruits. Show me inducement. Show me BC and CB monthly to what? 4 hour.
4 hour.
Show me fair value gap monthly to
4
4 hour. Then show me volume imbalance marked on your chart. Then also show me an EO-Fed, consequent encroachment, and a completely filled fair value gap. Thank you. Now, bye.
Yeah, bye, man.
Thank you, ma'am.